Hey, welcome back to The Market Investor. I'm Snyder, and this is all about margin accounts. What they are, what you need to know. Stick around, stay tuned, roll the intro, let's go. So what is a margin account? A margin account is really not any different than your normal brokerage account. So the thing to understand about a margin is pretty much a loan. That sums it up in a short summary, is that it's a loan, and it's a loan from your brokerage, right? So TD Ameritrade, E-Trade, Robinhood, Webull, whoever you're with, if you have a margin account enabled on your account, then they pretty much will say, hey, we'll give you an additional amount of funds that you can use to invest to hopefully capture additional profits using the assets that you have already bought, whether it's stocks, whether it's futures, options, etc., as collateral against the loan. It's the same way that banks use mortgages in your house, your property, as collateral against your loan for refinances or whatever. The brokerage is saying, oh great, you have 100 shares of Apple. We'll use that as collateral against this brokerage amount if you want to use it. One thing to note is that there is a periodic interest rate typically charged for margin accounts, and every brokerage charges a different amount. So you're gonna have to look into whatever brokerage you have and check out what that is if you want to use a margin account. So if you're going to use a margin account, you got to understand what a maintenance margin level is. A maintenance margin level is pretty much the value that you can have drop in, say you're using margin, right? You're saying you're using $2,000 in your account. They give you another $2,000, so you have $4,000 total that you can invest with. You go out, you buy all $4,000, but your assets start decreasing in value and you lose $2,000, and then technically you're down to zero. You probably will get hit with what's called a margin call. A margin call is typically just an amount of money that they calculate of, we think this is a little too risky for us. We don't know if we're gonna get our money back. So you have 3 to 5 days to either deposit this amount, whatever it is, XXXXX, $300, $500, $1,000, whatever it might be, into your account, or we are going to go into your account because you signed the contract to use the margin account, and we're gonna start selling all your assets. We're gonna take the money from that and use it to pay us back because you have lost too much money on margin. That is one of the downfalls about margin accounts. It's why I don't like to use them. It's over leveraging for what you have, and that's just not something that I'm really big into. And for most beginning investors, it's not something that you wanna be doing as well. Margin accounts are really just out there for the professional traders that they get in quick, they get out quick, because you also don't want to hold it. You don't want to pay your interest. It's just another loan. Think about it that way. It's a credit card loan with an interest rate, and you just don't want to end up in that scenario where you're paying interest to use somebody's money in the long run of things. So there are pros, there are cons, and let's talk about something good about margin accounts. So here's an example of what margin can do for you. Let's say you want to buy Ford stock and it's trading at $5 a share. Say you have $5,000 in your brokerage account, so you can buy 1,000 shares of Ford stock. Over the course of the year, it might go up to $10, and that's really great because you just made $5,000 because you sold at $10,000, right? Keep that, not calculating short-term capital gains tax. We're just talking about very basic scenario. So with a margin account though, say you want to still buy that Ford stock, $5 a share, but instead of just having $5,000 in your account, you have $10,000 in your account because you have margin. Now this is where it becomes into leveraging the great scenarios, but there's a higher risk, there's higher reward, and you could go the other way. So keep that in mind. So instead of buying 1,000 shares of stock, we can then buy 2,000 shares of stock at $5 a share. Say the same time period, it goes up to $10. Well, instead of just making the $5,000 profit, you make $10,000 profit, not assuming any of the interest or fees that come along with the margin account. So then that's gonna vary by brokerage, right? Everybody's gonna have their different interests. They're gonna have different fees for using a margin account. But you could profit an additional $5,000. And say the interest and fees is only a couple $100. That's a great win. But let's talk about the opposite side. Say you bought Ford stock at $5 a share and it dropped to $2.50 a share. This is the sticky situation because then you are now over leveraged and you are now doubling your losses. And what's gonna happen is you're gonna fall beneath that maintenance margin level and you're gonna get hit with a margin call. And they're gonna say, hey, the stocks drop down to $2.50. We don't really see it bouncing back anytime soon. Your account is now at $0 because they're going to leverage the cash in your account before they ever touch their margin. And what they're going to do at that point is if you can't pay and put that deposited money back into your account to bring it above the margin level, then they're going to go in and they're going to start selling your other securities, whether it's options, stocks, futures, whatever you might have to cover that level. So it's really risky, high risk, high reward, as a lot of the stock market stuff is, but margin can be beneficial for the professional traders, professional investors out there. For beginners, I would recommend that you still just stick with the cash that you have in your account, the net liquid cash to your name, and use that for the time being until you get more comfortable with the market, get more comfortable with what you're doing, understand what companies you like, which companies you really understand, if they pay dividends, if the stock price is going up because they have new products coming out. Kind of just understanding the macroeconomics of the world, because that affects the stock market, and you don't want to get caught in a bad trade. You want to take as little risk as you can, but maximize your rewards. So I have a few side notes for you though. The first one being that if your account, and this is pretty common across the board with brokerages, if your account is below $2,000 in cash, most of the time you won't have access to a margin account. That's just kind of like a standard barrier level that once you get above that number, they'll typically go, okay, well now you have an extra couple $1,000s because you broke in $2,000. It's just kind of the minimum requirement for most people. The second being, you cannot invest with margin on an IRA account. And this is a specific point only for a select few people that are maybe doing self-directed IRAs. When it comes to an IRA, maybe you have $10,000 in it, and you are in your IRA playing with your stocks, your bonds, whatever else you're buying. Typically, you kind of want to be like, oh, well, this is not taxable, this is a different scenario, but there is no margin available to IRA accounts. So what you have in there is what you can use. And lastly, just to recap, margin accounts differ by every broker. Every broker goes in, they have their own contracts, and they have their own requirements. So just because TD Ameritrade says one thing doesn't mean that Robinhood's gonna say the same thing. They have different interest rates on the margin. They have different requirements. They have different maintenance margin levels. They'll hit you with different calls. I mean, it's just across the board. So before you start with a margin account, make sure you go into your brokerage, you study and you read and you understand what a margin account and all the fees and everything is with them before you start using a margin to over leverage on your trades. But that's all I have. That's margin accounts in a nutshell. I hope you learned something. I hope you'll be wise if you decide to use a margin account. I'm Daniel Snyder. I hope you subscribe. Click the like button if you're into that sort of thing, and leave some comments. Leave some comments, questions. Let me know what's going on. I know you're at home. You're watching this alone. Maybe not alone, but if you are alone, I'm here with you. I'm here with you. All right. I'll see you in the next one.